Good afternoon, everyone. BC Richfield here comes to you live from London. A little bit later today at 1:30, which is bang in time for the New York Open. So, big shout out to everybody that's joining the stream live today and for everybody that's watching it on catch up. I wanted to do something a little bit different today. We'll still look at a couple of alts and bits and pieces for you. I see Seb's online early. Want to take a look at ETH, which is no problem whatsoever, mate. Do just remind me and we'll kind of take a look at that as we go through. Just going to kind of look today with a little bit more focus on actually taking these live trade setups and how I take these kind of intraday trades. So hopefully that's of interest. Do obviously let me know if there's any issues with the sound quality or with the video, or if I'm going a bit quickly. And we'll make a bit of time as well to look at some alts for the requests. So without further ado, let's get rid of my bit on there and take a look. Burned. How are we doing? Good to see you, buddy. Sebster as well, who's online. I know we've got maybe 15, 20 others kind of lurking there as well. I think maybe a little bit of a later start from me today. So looking to tie it in with the New York Open. Adrian, hey, buddy. MM as well. There we go. All the way from Thailand. Brilliant. We just need Kelly to jump on now at any point. And there we go. C-Ron, how are you doing? Happy FOMC day to you as well, my friend. Which, raises a really, really good point. FOMC today, we are expecting a bit more of an injection of volatility. We do want to kind of, make sure that we're showing a bit of extra caution. But I just wanted to show you how my trade setups were looking for like this morning. If I was looking to trade yesterday, looking at London session. So yeah, let's dive straight into that. Charts look slightly blurred. Yeah, I think at the moment, mate, just possibly because I am super, super zoomed in. If anybody can confirm that. Hey, Mars. There we go. Just a dad. Tea drinking brother. There we go, mate. I am. Actually, do you know what? I'm tealess, which is a bit of a disgrace. I've had a very tea-heavy morning. A very, very tea-heavy morning. I've been in meetings since 8 o'clock this morning. So there's been plenty of tea. So... C-Rock as well. Welcome, buddy. Good to see you. Looks okay, that end. Yeah, it might be a resolution thing your side, Seb. If there is, hopefully it kind of clears up a little bit. It also might just be that there's a little bit of a slowdown from an internet perspective. But look, we'll jump in. We're going to make loads of time for the alt requests, right? We're going to start with ETH. We've been kindly asked about Mask as well, so we'll take a look at a couple of those. But I did get a lot of questions about my day trading entries and stuff. And I'm completely transparent with every way that I trade. And it's something that I want to share with all of you guys as well. Certainly the kind of, the core makeup of it. So if it's something, look, I'm not a financial advisor. I'm not advising any of you to go and do this. But all I'm saying is if it is something that interests you, and especially in terms of looking at it, from a perspective of learning, then, hopefully it kind of sheds some light on stuff. So what have I got on here today? So let me show you something very quickly. I just left up these trades. We're taking off the ones from this morning. Yeah, plenty of volatility right now. That's right. Absolutely. I mean, things are going to look to front run FOMC. We're going to kind of have these moments. But let me show you how my thought process works in terms of ranges, dealing ranges and stuff, right? Where I'm looking to get involved in terms of premium and discount, which you guys hear me talk about a lot in terms of entries. I'm going to start here on the hourly chart. All right. So what I'm looking for, let me just hide these bits so they're less distracting. What I'm looking for when I'm talking about a range, dealing range, I'm looking on the hourly for where prices broken structure. Here we can see we're in a downtrend. Price breaks structure to the upside, and then it breaks structure to the downside. This I'm then looking at as a dealing range, right? And in fact, before I draw that in, let's get rid of all of this, right? Let's do it from scratch. So when I'm looking for that, this is my dealing range, right? How do I know it's a dealing range? Well, when we set this high, this low here, let me just zoom in a little bit. When we set this high, remember, this is our break of structure here. Yeah. Low, high, higher, low, market structure break. That's then when we're waiting for this leg to then do the same to the downside. So there's our low, lower, high, break of this low. Yeah. For me, is then when I'm looking at this and saying, okay, this is the dealing range here, right? So let me just pull this back. Okay, break of structure. This is the leg that we're interested in here. So while we've got this, what significance does this have? Well, let me put it as a premium and discount range so you can see it a little bit clearer to start with. Right? Now, I know if you study ICT and stuff like that, and if you're a purist of his, he has these the other way around, I think. It's just how I've always done it. Looking to long from discount, discount is red, premium is green, right? So you're looking to long from here and short from here, right? Now, there's parameters around that, meaning that you have to have an interaction with a key level. But I'm just showing you how I've established this range. Just make sure that's bang accurate. Because this is our market structure break. This sets this leg in motion. This shift or market structure break to the downside that then interacts with our 50 line like a range. For me, this is my personal way of doing it. To establish the range, I want to see a clear high set. Then I want to see the mid-range interacted with here. We can see there's a little bit of a reaction here. Okay. So for me, that's when we set the dealing range. And let me just put that here. Right, I do that nice and thick so we can all see. That's when this becomes valid. All right. Yeah, sure, Sebster. So break of structure. So for me here, we've got our low, swing high, swing low. This here is the market structure break or MSB. Why? Because this low is lower than that. So that makes this a higher low. We've set a lower low. A higher low, but a lower high. Higher low, break of this high sets a higher high, market structure break, right? Market structure shift, however, is slightly different. That's when we basically come off of having a, say that was a lower low. Yeah, so we had lower high, lower low, but then we broke this high. That would be a shift. But because we've got the higher low, then the higher high, that's what makes it a break. That's certainly what my interpretation's always been of it, and certainly how I trade it. On the way down here, here's our high. Yeah. Why is this the swing high? Because it's flanked by two lower highs. We then set this swing low. Why? Because it's flanked by two higher lows. We then set this lower high. So the break of structure would be here. Yeah. And then when we interact with the 50 line here, that's what sets this dealing range for me, right? I then go on to a 5-minute chart, and my rules are very, very simple. Just wait for this to load. So remember, we're live from here, from this green line. Yeah, this is our dealing range. I have to see price do a couple of things for me. I can only long from the red box, and I can only short from the green box. Yeah. Now I need to see price interact. Yeah. That means sweep a key level, fill a key fair value gap, right? Or come into an order block. And what we're looking for here is on the 5-minute. Let me zoom in a bit so you guys can see that better, actually. Hang on. Let me get rid of this. See price here. We've got our market structure break at this point. Price pulls back here. Now, when I'm looking for somewhere to long, I ideally want to see these lows run, so a key swing low, or I need to see an order block. Now, when I say a key order block, yeah, it's not just the last down candle before price moves away. I want to see a few more things than that, right? I include both of these because the two bodies, the two candles are consecutive. Now, when I draw that across, make that a bit more visible for you guys, right? Now, when I draw that across, just get rid of this. It's just an old. So, price comes up. So here we're down, right? Low, lower, high, break of that low, lower, high. Then we set this higher low, right? Now, What I want to see with a good order block is I want to see price break above, leave a fair value gap right here to show that we've got displacement to the upside. Then I want to see it retested. Okay. I would prefer to see a naked low or an untapped low taken out. But for me, this is still a level. Now, remember what I said. The rules are, and in fact, let's write the rules out. So only shorts from premium is our green box. Yeah. Only longs from discount. Red box. Must interact with a swing low, swing high, order block, or fair value gap. Yeah. So that's what this is here. This is a prior order block that was key and had significance to the move higher. Like I say, we would typically favor the lower, the key swing lows in this instance, or the swing highs, right? Then we need to meet our entry criteria, which is a market structure shift with displacement and retrace to a FVG, right? Make those a bit bigger. Can you guys see that all right? Let me know if you want me to make it any bigger. But we're just going to run through this and I'll move these along as we go. So, only shorts from premium. We're not in premium, we're in discount. So what have we got? The other thing that should be on here, which is a little bit more of a caveat, but ideally we also want to see a sweep. But I'm much more focused on the displacement of the move. Okay? So we don't need to have with that. We're only longs from discount. So we're longs, right? Price retraces must interact with a swing low, a swing high, an order block, or a fair value gap. Here's our order block. Why have I highlighted this one, not this one? I mean, you could highlight this one if you want. It's just key that it meets your criteria. For me, I want to see a fair value gap in the move away from an order block to give it extra validity. I also want to see the candles that formed that broken out of and then retested. That for me gives it extra validity, right? Now, I'm not just placing a limit order here. I still need to see other parameters met, right? So price comes down, it's met, tick, tick, must interact, in this case, order block, tick, and it must then apply to our entry criteria, which I've shared with you guys a few times, but for me, it never changes, right? Now, we have the extra caveat here that we ideally want to see a sweep. So we get our tiny little sweep here, right? We've also had a sweep here. Okay, now we're looking for our shift in market structure, not a break. The reason this is a shift and not a break, and this is why we label this up an MSS, or why I do that, not saying other people that think differently to this are right or wrong, and I'm the other way. This is how I trade. So see how we have a lower low, but then we take out this high here, meaning that we've now set a higher high, but we don't have a higher low, right? That's not a problem for me because what I need to see is the displacement in this leg higher, right? Very much like ICT would say in terms of that energetic move through that leaves a fair value gap. Now, as you guys know that follow the channel for a while, I'm not a purist, respect the guy massively, and I've learned a lot from him over the years, but I trade slightly differently to him and I have slightly different beliefs on the market. But a lot of these techniques, especially from an entry perspective, premium discount, stuff like that, you'll find in his teachings. And I do recommend that you guys go and search him out and follow his mentor if it's something that interests you as well. Always keep your knowledge horizon broad, right? So that you're not constricting yourself, okay? Now, here's our market structure shift. Now, what did I say we need to see? We need to see displacement. There's a fair value gap here, yeah? that we can see between this candle and this candle. And there's another one here between this candle and this candle, right? So then what I'm looking for is I'm looking for price to retrace to one of those fair value gaps, which we get here. It's going to do this a different color. I'll do this, if it's a bullish fair value gap, I'll do it in green, yeah? So that it gives us a little bit more visual. Price pulls into this, our stops can be below there. Now, I wouldn't have taken this entry, right? And I'll tell you for why. I'm not suggesting that you wouldn't if you went into it, but I tell you what I need to see. You see here, this fair value gap isn't down in discount. I would want it to be here, and that's where I'd want to see the retracement coming into. So for me, there's no entry there because it means that it's just a slightly worse risk to reward, okay? So while that's there, I'm then saying to myself, okay, well, does our trade theory change? No, of course not, right? Then you need to ask yourself, is the risk on the next leg? Because look, here's the move higher, yeah? Takes out this high. What do we have in here? Displacement. Yeah, our fair value gap. So this would be our entry. Now, the problem that we've got here is, again, we take our premium discount of that range. Yeah, we see that it's down here in discount, which is perfect. But our struggle here with this entry is we need to know we've got a decent upside target because we've got no choice but to put our stops below this low. This is the origin of the fair value gap here, and we have to always have an expectation that price may well trace as low as even this fair value gap here. Yeah, so you wouldn't want to put your stops under here to get stopped out here and then price do this, right? So this is where our clear upside targets. We expect price to come up into premium, right? And then we simply want to mark out where our key targets are here. Nice high there. Where we expect there to be liquidity, we expect there to be liquidity above here. And ultimately, we're looking for this high, right? Now, while we're down here, we'd also be aware of these, yeah? Because this is the first kind of real part that's here, up in premium. So can we enter here, right, with our stops below here and have at least a 1.5R to this? So that's our entry. Stops are below the origin of the fair value gap, which is here, just a couple of pips below. Just. All right? Because the reason I want to see this get to at least 1.5R is because I'm going to monitor this as it moves. And as it gets to this target, we then want to see the down close candles here, the order blocks, respected. And as we can see, price really flies away from this, all right? So then we've got our stop loss at entry. We've got a nice risk-free trade as we're moving higher. So that's what the long setup looks like, okay? Now, what else did we say? There's a couple of things we just need to do here very quickly. Right, so remember what I said. That was our dealing range here. However, the range has now increased its high to here. Where I wouldn't move a trading range, because that's a deviation, just so that I get my premium and discount accurate, I'm now extending this up to here. Yeah? So we can see we've not broken key structure here. This has moved up and set a new high. So this is where we are. Everything else remains the same. Thanks, Eron, buddy. Yeah, hit up the likes if you're liking it, guys. It's not a vanity thing. It's just purely that the algorithm will read it. If other people like this kind of content, it will just help direct them to it. So as we can see here, we've now adjusted our range. Let's remember our rules, right? What do we want to see here? Only shorts from premium, which is green. So we're only allowed shorts from up here. What else do we need to see? We need to see a key level, yeah? So we have this level here, but ultimately, like we said, we have a couple of things here. One, we have this untapped high, which I absolutely love the look of this, yeah? Secondly, there's an order block in here, yeah? Arguably this move here, fair value gap after it, or this move here, fair value gap after that. So even if we made an allowance for this area here, let me just take that up to the top of that here. By the way, I'm someone, I only make allowances for the bodies on those, which is again different to ICT and a lot of other traders. I'd always say with that, just make sure you really test it. Just make sure that you've got a lot of data behind it. For me, it's a bit more of an old school FX thing, I think, but that's just how I like to see it because that's where the volume is in the bodies. So when price comes into our level here, we can see price comes up, comes down, breaks up again. Now we get back down underneath this order block. Yeah. So what are we looking for? Let's move back to our parameters again. Now, if we hadn't have been expecting this deeper drive up into here, right, then this fair value gap may have presented an opportunity for us to go short, right? Now, the fact that we've got naked liquidity, untapped highs so close, makes me feel like we purge higher into this. However, if you'd taken this fair value gap, price would have retraced and stopped you out. Don't let that put you off. When you're testing this, if you're in it too early and it stops you out, the trade parameters don't change, right? We're still in premium. We're still looking for shorts. We're still interacting with a key high time frame level. But let's say we did take that short in this fair value gap and we got stopped out. Yeah. Then we discount this. And then we're looking for liquidity to be taken here, which we see. Now, remember what we said. We need to see price break structure, or shift structure, leaving an inefficiency. So this low, price comes up, sets this higher. Then it sets this low here. Yeah. Or if you wanted a cleaner low, you can make an allowance for this low. These are our shifts, right? So here's our market structure shift. Sorry, let me do that as a bearish one. That's going to tweak my OCD. Right, there we go. So now what we're looking for? We're looking for this move down, right? Do we get a fair value gap? We don't, right? No problem, like we didn't before. So then we're looking for this low to be taken out, which we get here. And what happens? The low gets taken out with displacement, meaning that we get our bearish fair value gap in here. Right? Now, price comes up, sets this high. Obviously, we've triggered our entry here. Right? Price has broken away, close of this candle. It tags us in 3 candles later. Right? Now, the reason that we can target this swing high here is because we've got the displacement in this leg below. We expect this fair value gap to defend along with this order block. Right? However, if you're not comfortable with that, or your testing shows you that that keeps you out more often than not, and you need to put your swing high above here, you need to put your stop loss above here, it's very, very important that you make sure you've got the correct risk to reward. So if you were targeting down here, you'd be just under your 1.5, right? So that wouldn't be of interest to me. I'd be happy to take this here, knowing that realistically, by the time price has interacted with this low here or this consolidation would be my first point of interest. And I've got a 1.95R for that. All right. So that's then when we play our short trade. Once again, what do? We're waiting for price to come into our level. So we're in red now, right? Meaning we need to long. Do we sweep a key level? We do here, right? You can look at that down move before price moved up. Either way, we are in a premium. We're in a discount, so we're looking for longs, right? I need to see the origin of this move start here. Now, if everybody remembers the same rules, what do we want to see? Here's our low, here's the high, right? So we're now looking for that high originally to be broken. However, price then comes back down, sets this low, and then this high. So this is now our market structure shift. It might be a break, actually. I can't see without it, so we'll just label it up as a shift. So what was that? Low, higher, high, high, low. It was actually a break, but either way, we see the level broken with displacement, right? What do we need to do? We need to take the displacement leg, which first of all is this low to this high. Yeah. When this down close candle closes, it drops down into where? This fair value gap. And this time it's bullish, right? So we can get rid of our dealing range, we get rid of our premium discount range now. And we remember, here's the origin, of that displacement leg, which is a nice distance below here because that's our entry. When we tag in here, here, or here, right? Stops below here. Where's our first most logical point that we could look to reverse here? Are these swing highs. Almost equal, right? So relative equal highs. So we would be aware of that and we would target the lowest of those. You might target this, See that here down, again, another low, hasn't taken liquidity from that or that. So if you want to be safe, you've got a 3R trade heading up into that, okay? So hopefully that kind of explains the idea behind the premium discount range. You get a lot of questions on that, right? So if you've got the ability to take a screenshot, if it's of interest to you, if it's not, don't obviously worry about it. But if you wanted to, then you can take a little screenshot of this. And this has got some trade examples, obviously, here. Should be to there. These would obviously be set to our extended targets, right? Rather than, and we're just using the same targets, right? We're not cherry picking. We'd be aware of this low. We'd be aware of this consolidation. We would be managing this on the way down. I'm not saying you'd hold completely to get your 5R on the way down. You'd be trimming profit as you go and then looking to move your stops up when you get to a level like this. So maybe this stops you out on the way up. It doesn't just, but if it did, don't worry. You've booked like a nice 2.5, 3R trade at that point, okay? So if anybody does have interest in that and wants to take a look. So order amount and leverage guidance. Yeah, sure. So I use my good friend Razoon's position size calculator, position size manager. Something you can get access to as well if you want any of the either the free signups. You can get a limited sign-up deal that's coming through. We've got some new offers coming out as well for people that are going to be some more accessible packages, and everybody from the Nest gets access to this. It's a really, really cool tool. Just allows me. So let's focus on this long trade, yeah? My first line goes on the entry. Second line on the stop loss. Third line on the target, yeah? And you probably can't see this that clearly, but this box down here is based on a $1,000 account, yeah? Using 2%, which means your stop loss here. If you lose this, it's $20 plus your fees. But then the really cool thing, your position size here is 2,061, meaning that you work your fees out based on that. And I would work that out on an average of 0.15 to 0.2%. Yeah? So let's do that. I'll grab my calculator out. And obviously the percentage size is depending whether you're market or limit or entering, etc. So these are all limit orders. The system's been designed that way because it helps keep your fees down as well. So what did we say? 2,061 was the position size. Yeah. Now we've only got a $1,000 account. So therefore we would use 2.5 leverage, right? To put it up to that point because our risk is still only $20. Our risk is 2% of that 1,000, right? So times 0.15%. Your fees are looking around about $3 to $4. Yeah. So it's a really nice trade. $76 return if we hit this target. However, what you need to be aware of is we would have interim targets here as well, right? So when you want to do that, you take your target line. For me, this would have been my first take profit as long as price had started to hold here. If not, I would have held it for higher, and then I would want to see this level hold here. But if we had taken profit here, we would have taken profit from $48. If we closed half the account, we would have taken $24, right? Which is double what our risk is. Plus, we've still got 50% in to travel to targets higher up. All right. So I hope that's useful on that one, guys. Just remove that very quickly. And as everybody, if you want to, taking a screenshot of that, because if we have, I'm going to move off of this and then we're going to look at what kind of trade setups we'd be doing this morning because we had some nice long setups using this during London. And now I just want to, as long as everybody's happy, I'll move to the current data. Tell you what trade setups that I'm looking at. Okay, awesome. So, as we can see, we're still in this, right? We're still in the same premium discount range here. So I'm just going to extend this across. So remembering our principles here, what are we looking for? We need to see price engaging with the key level. So obviously we've got this level here, which was historical. So actually, let me just get rid of that because that now we've swept that. Yeah, Seb asks a good question here in terms of times of day to trade. So I trade the London Open or London sessions. My favourite sessions, as you can see by my indicator down here, is that's New York AM to New York PM. So for me, I'm overly active 1:30 in the afternoon till 8 PM. But again, I would always recommend that you test that for yourself. Yeah, in terms of what areas, what zones you want to trade. I've got a fantastic student, New Zealander, who obviously it's just not practical to trade those kind of sessions, right? So has built his system around the Asia trading session, right? It's just a case of studying it, trying to understand it, and then working out what you're looking for within it. So for me here, now I'm looking at this for a potential reversal, right? So I'm going to zoom back out to my hourly and say, okay, do I think the price could revert here? What have we got? And this looks juicy. These two make up equal highs. Just delete that now, actually, or hide it. So equal highs, this high and this high are pretty much spot level. If price runs that level, which is also our liquidity level here, we have an expectation that price could then break down. Now, we don't want to predict what price is going to do because for all we know, price could go to the absolute moon from here, yeah? But we've got key liquidity targets here. We expect stop losses to be resting above here. So then looking down onto the 5-minute chart, what do we want to see? Well, we're up in premium, yeah? So we're only allowed to short from here, yeah? So when price comes up, which it's doing now, if we see something like this, price comes into this level, yeah? It's coming back down, little sweep. Want to see that displacement, right? So when we have that structure shift, it's important that we see that move lower, that within 50% of that, right, leaves a fair value gap. And that might be here, for example, right? Then we know where we're wrong because our risk is above here, right? Now we've got clear downside targets, which we can monitor. We now want to see price. When that happens and we get that close below, we wait for the fair value gap confirmation. We make sure that it's in the 50%, right, of our discount premium range. So this bit is right here. So we take our short position out, limit order on the bit that's sat within premium, stop loss above that swing higher because we want to see the fair value gap respected, right? But we definitely want to see this respected. And then we want to know if coming down to our first target, we've got a good risk to reward, which we do there. And ultimately, we're then looking for extended targets further down, all the way, potentially down into discount. But I don't like holding risk. So when I get to target one, I'm trimming a little bit of profit and I'm moving my stop loss to entry, meaning that the trade's risk-free. All right? So does that make sense, guys? So that's how I'm utilizing premium and discount in that respect to try and find that. Is there not a chance of upside if you have a deviation like that? Well, actually, Ron, it's a very, very good. Well, see, Ron, it's a very good point, right? If I want to see a breakout here, right, and then I'm ignoring my premium discount range here because we're breaking out to new territory, right? So I'm then looking for a larger range that we're stepping back into. Personally, what I like to see is price come up, and then this high that we set, right, rather than price break down here, I then want to see price kind of establish itself above here. Right, and then we can look for entries here. Right, so this basically is forming a base, and then on the lower time frame, yeah, like a 1 minute, or depending on what your low time frame is, then what you're looking for is you're looking for price to do something like that, sweep some liquidity, get back into a bullish posture, and you're looking for that fair value gap, premium discount, stops below here, and then you would just be monitoring for upside targets that you would find on the higher time frames. All right. So that's why without moves like this to give us confirmation, it's just a very, very kind of tricky thing to do. You're placing lots of limit orders, and that can just be a very, very risky thing to do, right? So I like to look for that confirmation. Quick question here for Dan M. The fair value gap acts as resistance in this short situation, then. So basically it's a bearish fair value gap in here, right? So we want to see bullish fair value gaps for longs or bearish fair value gaps for short. So let's find you an example. Yeah. So just as we've done there, let's imagine that this setup here was price running our key level. Yeah. Like we discussed there, the exact trade we're looking at. Let's say we run that level here, right? And then price starts to break down. Now, what are we looking for here? This bearish fair value gap. We're looking at that as a magnet for price to trace into to rebalance before taking further downside. All right. In the same vein that when we're down in premium, yeah. So down in discount, let me find you this example. This is where we're looking to take the longs from our bullish fair value gap, which is this one. Yeah. So bullish fair value gap on the way up, we look for the retracement. That's our trigger or my trigger for entry. If it's a bearish fair value gap, we're looking to do one of two things. We're looking to short it, right? Or we're looking for inversion. Now, I'm not going to go into this in too much detail today, guys, because again, I always recommend that you read ICT stuff directly. I'm happy to certainly tell you how I use it. But this for me is a bearish fair value gap. So if we expected continuation lower, we'd be looking for price to come back into this level, yeah, and then short. However, we're in discount, so we're not entertaining shorts here. So how we can use this to our advantage is by saying, well, okay, look, we've got our bullish fair value gap here and here. Now, if we see this bearish fair value gap act as support, we can use this as extra confirmation to go long, all right? No, you're very welcome, mate. Absolutely. Always ask questions. Questions. It's the very best way to learn. And there are no stupid questions. Whether you're starting out with your experience, if you don't know about something, ask, right? I ask people, I'm always quizzing Berb about stuff. His knowledge is so incredibly broad. But always asking questions. So yeah, very good question, mate. And never hesitate to ask. So that's the setup that I'm looking for at the moment on Bitcoin. If we get it, we need to see the breakdown. We need to see displacement. Yeah, remembering this is displacement in a bearish sense, this impulse move that leaves a fair value gap. So what have we got? 38 minutes in. We're doing okay, actually. Normally I've rambled more by now. Seb wanted me to take a quick look at ETH, so let's take a quick look at ETH. And then we'll take a look at Mask as well, I think. Guys, was that right? Someone wanted to see Mask? So, what have we been taking on ETH? You'll notice on the ETH chart here, my actual trading chart, that I've got the high time frame mother bar, high and low set up in here as well. Quick question here. So, it's not really my area of expertise, to be honest, mate, as a day trader, but it's a good question. Would you say it's a good time now to buy Bitcoin as a long-term investment or after the FOMC meeting? I would definitely not buy anything now before FOMC. I think there's an inherent risk here that the Fed decides to defend its position. Now, what's priced in basically, or this is my view on it anyway, is that the market is now expecting a 0.25 hike rather than a 0.5. It could also come in at zero. If it's zero, I expect bullish continuation. I wouldn't trade it right away. We typically expect a bit of a whipsaw, highs and lows to get taken out before price settles. But what I would be looking for a lot more is if we get a zero, I think we really could fly up. But if we get 0.5, I think that could drive us a little bit lower. What I would say is, though, that price is fractal. And let me just show you something very quickly on here and how you can use this on higher time frames. Just mark all this up. I have been so lazy with this ETH chart, look. So let's just mark this up as recent. It always pays dividends, ladies and gents, to just make sure you take your different setups and you mark them, update them like I've kind of done with these other ones. because then when you want to get rid of it all, my goodness, is it easier. So there we go. Just going to turn our session breaks off. So talking about this in terms of looking at, by the way, guys, Ciroc, Seb's, Car, thanks very much. Appreciate the feedback, guys. So when we're looking at this, you'll notice that I've got this higher time frame range drawn in here. Yeah. So we just adjust this down because this was done on a daily. If we were looking at this on a weekly, price has come down, taken out this, moved higher. So for me, this is my what I'd consider dealing range here. Yeah. So price is currently contained in this move higher. So if I wanted to be a buyer, I'd want to be a buyer down here in this fair value gap, right? Or a buyer here when we run into this order block. Up here, I'm favoring shorts. So in an ideal world, when you saw the price move up into the higher part of this range, yeah, you would want to be looking at it like this. So exactly the same techniques, right? I've drawn this the other way up, which is why that's red on top and green on the bottom now, which is how ICT would have it, because green represents you go long from there, red represents you go short. I'd always done it the other way, so I've become a creature of habit. But this is where you'd look to go long, right? Why? Because the same as our last principle, we've taken out a key high, we've come back, we look for our high time frame fair value gap, which is here. Let me just make that a bit, I'll make it green actually because we're longing. Price comes into here, this is where we want to long, and then we've got targets in here. In terms of looking at it from a perspective of investment, though, is slightly different. And for that, I would really recommend looking at people like Pedma7, Pedro, exceptionally good on higher time frames. Burb is an incredibly good positional trader. And Jay as well, Trading Tank, holy hell, that guy on the higher time frames is crazy. For me, I'm much more in tune with the lower time frames. I'm looking to get smaller moves, but we can see here, right? This is the, same principles apply. If we're looking at price stepping into this price leg, which is what it will do if it breaks out of this range, once it breaks out of this range, it might pull back here, in which case we've still got good long opportunities here. Yeah. So I just really recommend studying it in that respect, but also looking at some really good high time frame position traders as well. So a couple more questions here. We're going to take a look at just this very quickly, then we'll take a quick look at Mask as well. Key Forex trader, which indicators of those you have hidden? Okay, yeah. So on these ones, they're mostly kind of bits like this that are showing me sizes, or they're bits that I'm testing, right, that other people give to me. So it can be different moving average setups, which I'll test, break of structure, change of character to test whether it's triggering and happening in the right way or whether it needs too much confirmation. What I always have on is my B Pro. It's our in-house indicator, the Burbicator Pro. I use it for the divergences, but it's basically a standalone system. And then you've got the 200 MA, right, which is key. Obviously, this is on a weekly at the moment, so it's not going to show up because we don't have enough data. But that would come up on there. When I train some of my students, we use this, which is our inside bar alert. So it shows you the ones that are coloured are the inside bar, showing that the previous candle's a mother bar. That's how we set ranges. And then I've got my ICT kill zones as well, which is just a slightly different version of what I've currently got on, but it only shows on the lower time frames, and it includes the Asia Open as well. So back to this for recency, right? So we're in here. This is our dealing range on a higher time frame. But if we're looking at this on a lower time frame, I imagine we're looking at a pretty similar setup here to that of, just get rid of that. A very similar setup here to that of which we're dealing with Bitcoin. Yeah. So if I'm looking at this, I'm saying, well, this here before price broke down is my dealing range. Now, remember, whenever we're doing these, actually, let me do it so it's clearer for you guys, isn't it, if I leave it in PD? So I'm drawing it the other way now so that it makes more sense for you guys looking at this. So this is green at the bottom and red at the top. So green long, red short makes more sense rather than my backwards way of looking at it. So I don't want to impose that onto you. Now, here's the low that we set. Why? Here's the consolidation. This is the run higher that takes out this high. We then sweep liquidity, break structure, and test our midline, right? So this is now fixed. So I lock that. Once again, I'm then dropping down to a 5-minute chart. I need to see a key interaction, with highs or lows. For example, here, relative equal highs here. You would want to see this move. Does it break structure? No. Does it have a displacement in it? No. So then what do we leave here? Well, we've then got 1, 2, 3. So we've got this sloped liquidity here. That's taken that. That's then taken this. If we see our breakdown in here, again, we have a short bias, right? So we've swept these highs. Just zoom in so you guys can see that a bit clearer. What do we want to see here? Here's our market structure shift. Here's the displacement, the fair value gap in here. Does price retrace into it? Unfortunately not. And that is one of those things, unfortunately, guys, that you get sometimes. But you can see in here how we didn't have displacement in the leg, and we also didn't take out the low. This is filling this inefficiency before moving higher. You want to see a good, clean displacement like this. See how the candle's mostly body? See this? Mostly body, small wicks, nice big fair value gap here. If this had retraced into here, would have given us a lovely entry to then go lower. So that's just an example of what's in here. You can see the same from the bullish perspective as well. So what am I looking for here? So my first point of interest here, if price is going to reverse early, is saying, where's our key liquidity? Yeah, so I'll just draw these with rays so we can look at these. I'd say we're looking at here, here, and then ultimately the top of the range. But see how this is lagging behind Bitcoin in terms of the dealing range. Now, there's also the liquidity resting above here, right? So once again, I don't know where it's going to reverse. All I'm doing is I'm just labeling up the key areas, and then I'm looking for that pattern, right? Which is price to run that, come down, do something like this, break structure. When we have the shift or the break in the structure and we've taken out a key level like we have here, we then look for the fair value gap, which lives in here, and then price to retrace into that, stop loss above here, and then we trade it down to clear targets, which for me would be that down there. All right. Key Forex, you're very welcome, mate. Very welcome. And that's where we are on that. So that's my thought process on that at the moment. Let's take a quick look at Mask for you guys as well. And then we'll finish up for YouTube user on STX USDT as well. Have a little bit on that one. Guys, if I've missed any of your questions or anything, please don't hesitate to just ping me a reminder. Here we go. So here we are with Mask on the hourly. This is an interesting one, right? So this is a tricky dealing range, actually, because we kind of have a breakdown here, right? And then we have this break of structure, which takes us back in to a bullish posture because we've got our high, lower low, lower high. Then we don't come and take out this low. So we can take this part of consolidation here. And this is a good example, this one, whoever picked this, because this is a tricky dealing range to pick. So I would say as we come down from here, I'd want to see a break above this high. This is how I would interpret it, right? And I tell you as for why, because this is a structure shift to the downside, right? We take out that low. We then set the lower high. However, we set a higher low, and then the break of this high then gets us back into a bullish stance, right? So taking out this high, yeah, and I want the origin of that, which would be here. So now on Mask, it could be giving us some long setups. What would those long setups look like? Well, on the hourly, we've got an hourly fair value gap here that I believe price is interacting with. So let's draw that in here. All right. Now, the same way that obviously when we were looking for short trades up here, we were looking for that high to be swept, this high to be swept, for price to retrace into these fair value gaps, right? Any hourly or like high time frame one that we've got, yeah. And then we're looking here and we're saying, okay, down to our next time frame, which is our hourly, which is our 5 minutes, sorry. Now, as we look left, we want to zoom out and say to ourselves, okay, we've clearly run this low here. Have we run any lows further back? Let's just zoom out just very quickly. No. We're just within this fair value gap. If we had like a key low, untapped low behind there, would give a bit more validity to this, in my opinion. However, we've run this. We've had a liquidity sweep, below here, right? We've had an impulse move higher with displacement. That's our market structure shift. What are we looking for in terms of an entry? Shame we didn't look at this one earlier, as this one went off this morning. Premium discount. What do we want? We need our fair value gap that's in discount. So none of this counts in here, not that there is any, but it needs to be in discount. And the fair value gap that we have is this one. So that's our entry. I don't know if I can make that any brighter for you guys, actually. There we go. Entry stops below the swing low. So it would look something like this. Long position here. This would have been our entry. Our stops would have been under here. We would have been targeting this high as target one. I would have been conscious of these because they're relative equal highs, right? So I would want to make sure that we're at least 1.5R before we got to here. Actually, we've ended up coming up and taking this out. At this point, I'd be looking to trim a little profit, and then I'd just be moving my stops up to entry just to de-risk it. If we get a flush now, if Bitcoin starts to drop, or the lead into FOMC can always be a little bit tricky. So that's what I'd be looking for on mask. I hope that's been clear. And let's just see with a few minutes remaining. Let's try and drive into a couple of more. What did we have? Okay, we'll finish on two more. STX, yeah. STX USDT. Let's take a look at that. Oh no, sorry, that was SNX, wasn't it? You say YouTube user, was that STX? Was it? Sorry, USDT. Now, I wonder if it's a STX. Oh, okay, perpetual. Yep, sorry, I missed it here on Bybit. No problem. Let me just add that in. STX. Let's have a look at this bad boy and see where we go. So once again, by the way, as well, thanks, May. Yeah, just seen that we've got a perpetual here on Bybit as well. So I'll use this chart. Now, obviously, I'm starting these with you guys on a hourly, right? Because I'm looking for these dealing ranges. However, I would actually be kind of looking at I would always do my top down from a daily, right? But because we're looking for intraday trades, that's kind of representing my high time frame here, all right? Now, this as well is a tricky one because I would say that when we were back here, this was our premium discount, yeah? We could adjust that to here when we then move up higher into this and say, okay, well, within this low and this high. The other way that we could do it if we were looking for more recency when price came into that level is we would look at that. We would look at this as a deviation, and then we could move this down to here once price has now done what we described before, which is interact with our midline. Yeah. But obviously, before any of this played out, before we had this interaction with the midline, we would have been basing our theory off of this dealing range here, which is this high to this low. Remember, we've swept a previous low. We've broken structure to the upside. We've now come down, broken structure to the downside whilst testing the mid-range, all right? So this line here represents where this is live from. So then when we drop to an hourly, we obviously deviate the bottom here. All we're saying to ourselves is, within this dealing range, what do we currently have? What did we have? So we ran this high here. Yeah, this nice consolidation as well. What did we get? Price broke down, took out this low, retraced to our fair value gap. So we're short here, targeting here. Would have kind of given us the heebie-jeebies a little bit here because our stop would have been above here, but ultimately we made it down to this target before reversing up. Now, it looks like these are cherry-picked, but in truth, they're just where the obvious liquidity is sat. And obviously, it's a lot easier to do this with the power of hindsight, right, than doing it live. YouTube user, awesome. Just a dad, thank you. I owe you a cuppa. I'm sure we will do one day, mate. We'll meet up at an event and drink tea and put the world to rights. But guys, you're really, really welcome for this. I enjoy it. I really appreciate all your time listening. I was very fortunate getting into this industry that some really, and I don't put myself in anywhere near the brackets of these guys, but I had some really exceptional traders that took their time to do this with me. And I think just a nice way to give back. So short trades from up here. Yeah. See this one? See how not running a key level kept us out of this? Yeah. Because we had displacement. We broke structure. But this one here ran this key high and these that it's left in its wake. Lovely. big drop down, look for a retracement into here. And then where we are at the moment, we would have adjusted our range, like I say. See if I can do that here actually without. Boom. So now we're saying, okay, well, price is now coming up into potentially up into a discount. Yeah. So we want to be aware of any of these key areas that could reverse it. We look at this one, but it would be very tricky because if it reversed here, it would probably be back down in premium. Yeah. In discount, sorry, meaning we'd be looking for longs. So the first kind of one I'd be looking at would be something like this. But realistically, I'd probably expect a little bit of a larger move up into here. And we've also got this really nice order block here. These are the last joined up candles that led to this sell off lower, right? Did have displacement very small just between these two. So I'd mark that in and I'd say, okay. If price starts to reject here or either of the pink lines, then, oh, Christ. Let's just make that a little bit less invasive. There we go. So I've got my targets now. And once again, I'm just monitoring this today and I'm saying, okay, do we see something like this? Boom, take some liquidity, right? Come down. What happens? We break structure. When we break structure, either of those, we then want to see a fair value gap left in here. We want to see price retrace into this, stops above the swing high, and then we've got nice low targets, probably here. Then you're looking at these, and you're just monitoring these as you go down, right? Because like with these ones, right, if we thought price was going to reverse here, we wouldn't just sell here, right? The price blew through it, but you would then look for this to be respected, okay? So drop those off, and then I did promise one more, didn't I? Who was it? Nemesis. Okay, mate, no problem. Let's have a look at GRT, and then we'll close this up for the day. Hopefully, this has been helpful for everyone. Give you guys some food for thought. Do be very careful today, everyone, please, with FOMC. It can make a fool out of the very best traders and can completely turn the very best laid plans on their head as well. So, what's going on with GRT? I don't know what that line is doing there, so let's hide that. So hourly now, what's holding price? If we're looking at a really clean leg, I would say probably this. Down here, right? This would have been a nice opportunity here. We swept this standout low. If you're ever concerned, not concerned, but if you're ever thinking if something's what you'd say clear and obvious, you see how this really stands out, right? You see these kind of little ones. They're equal lows, so they would have some relevance, right? But, you know, this low, for example, right? Or if you're looking for order blocks, say to yourself, okay, well, what could it be drawing down into? Yeah, what could price be reaching for? So just make sure that you're not trying to kid yourself and you're finding some real little piddly low like this one and go, okay, we've swept this, so now price is going up, right? Just give yourself the chance. This one here, if you don't make it into this one, this will have some significance because it's an hourly order block. We'll just do that slightly thicker. Now, what happened here? Did we get our setup here? Sweep. What happens? Price goes up. Doesn't break structure, however. But what happens here is we do get our structure break here, right? Because price comes up, takes out this high, which gives us our market structure break. And this is a break because we've got a higher low before it. Then what we're looking for here is this is the displacement leg up. So we need to find our fair value gap down here, which is here in discount. Entry would be here, which we trigger over here. I'll keep that in blue. No, I won't. Don't be lazy. I'll switch that to green. Blues are our order blocks. In here, stop loss below here, right? This swing low. Long position. Not sure it quite touches it there, actually. I think it is actually this move here. Stop loss below here. Just a little bit below. You don't want to get caught up on the wrong side of that. Initial target is this naked high. We just don't have 1.5, unfortunately. If this was slightly higher and we got our 1.5 minimum here, I'd have entered that. But with this clear low, this clear high here that could take out price, this is what you want to be wary of, right? Or if you did enter and you took a loss, no problem. Don't be afraid of losses, and don't let it put you off taking trades to the same parameters. Here, what do we get? We're now in our high time frame order block, our hourly order block. This deserves a lot of attention, right? What happens here? We take out this high. Do we have displacement? We actually do. So here's the high, right? High, higher, low. This is our market structure break. I think we get a couple of good entries here, actually. This is the displacement, right? If this is our displacement leg from here to here, yeah, because this is the leg that breaks market structure, we can see that we have our fair value gap down here. So that's our entry, right? Draw that across. I thought we might tag it again there, right? So that's one entry you could have. You would, I think, be more conservative. You have got a little micro swing low here. You may be tempted to kind of put it under there, or certainly on the volume basis. Just I'd be worried about that getting tagged, but it didn't, as we can see, so my worries wouldn't have been founded. However, this is our key target, right? See this standout high? The same reason we were cautious of this one. Nice big peak, that nice kind of V shape, right? Showing that something's clearly rejected price here, which is why we would have been aware of that and why we wouldn't have taken it, because it didn't meet our 1.5 criteria. We actually, judging by that, only had like a 1.23. But if you had have taken it, and they aren't your rules, no problem. Stay in, stay to your term, stay to your strategy, because then you've lost 1R here, yeah? But look how beautiful this is. This is your first trade. You've entered here. Even if you were taking the conservative stops below there, yeah? Your first point of interest here is 2R. So halfway through that, when you take your stops here when they're flat, all of a sudden you've got your money back and then some for the previous trade. What else do we have here? Well, we haven't reached that target yet, right? So let's just draw that in. Remember what I was saying. This is our key target. We're expecting price to reach for here and make a move back to premium, okay? So if this is our target, we should do the target color in. Let's do it in orange. Then see how we fall short of it here, right? Well, what we can do here is where we've taken out this high, but we haven't reached target, we can take this, right? This is our displacement leg. Price breaks down. Where's our fair value gap here? We can draw it to this low because that's already been filled. So then we say to ourselves, right, is there the risk to reward if we get to target of compounding and adding to our trade further? We need our stops to be under this low because that is the swing low, right? Do we have 1.5? Just 1.58, right? And then ultimately we're looking for targets that are up in premium. Okay, guys. So look, I hope that's been helpful. Let's just take a very quick look at price action where it is at the moment. I think in truth, we've had this sweep here, this move up, which didn't give us an opportunity to get in. We then fulfilled liquidity on the highs. So you don't want to be getting in there unless you're taking out key liquidity again, right? We've taken out our key liquidity here. What happened here? We broke structure. Just see that? Did we have displacement on the 5 minute? We did not. So this one didn't give us an opportunity to enter here, all right? We then had this leg up here that this would have retraced into. But with these kind of moves where you have these kind of highs on the way up, you just want to show a little bit of extra caution, all right? So for now, I'd be pretty neutral on GRT. I think I'd probably be looking more to the higher time frames and kind of saying, well, what does this look like it's going to do overall? Looks like it's kind of holding this level quite nicely. I think makes sense. We've got these key highs up here. Price could run for them or them in the hunt for liquidity. If we get into this area here and show weakness, I know the correlation hasn't been world beating recently, but ES is showing strength. Or is ES showing strength? It was this morning. Yeah, so ES is still showing strength. That's normally good for risk assets. And the DXY still looks like it's got a pretty decent bit of downside to it as well to go. So, they don't always work, but we want to monitor these things and say to ourselves, okay, DXY, if that's showing strength, we typically think it's going to be bad for risk assets. And if it's showing weakness, then we, take that there's a little bit more of an appetite for risk. But what I'm talking about in terms of potential downside for the DXY is there's not really a lot to stop this before we get to these lows, right? Now, could do, of course it could. Price could reverse here, it can reverse wherever it wants. But for me, when we look at this, even on this scale, right, look how price just hunts liquidity. Didn't reverse here, did it? It reversed here. Why? Because of that clean sweep. Yeah. This order block is what sent price coming back this way. Okay. So you'll always see it. Price is just on the downside, sweeping that liquidity, searching up inefficiency to sweep that liquidity, searching up inefficiency to drive lower. That's certainly how I see price. So look, guys, I hope this has been helpful. A few minutes over the hour. I wanted to make this a slightly longer one. Nemesis, really sorry, mate. This is going out obviously on the Birb Nest stream as well as my stream as well. So Birb Nest, the team that I work with. Birb is a beautiful, bald, bearded guy that you'll see, absolute legend. My name's BC Richfield. I'm one of the analysts that works alongside him at the Nest. Guys, if you found today helpful, fantastic. If you've got any questions, don't hesitate to reach out. Do check out our offers and definitely keep your eyes peeled over the next kind of week or two. We've got some really interesting offers coming out in the next kind of 7 to 10 days. Really, really cheap access for limited amounts of viewers into the Nest. There's free trial access below as well. And if you want to get involved with any of the current deals, you can find them in the description down there as well. All right. Burns, Seb, McRaw, good to see you on, bud. Didn't see you there in the background. See you on Nemesis, YouTube user. Dan M as well, just the dad. Quitpar, is it? I'm really sorry, I can't pronounce that at all. But you, legend, very good questions. Seb, obviously, key Forex trader, awesome to see you on here. Welcome. Carsten, Siroc was on as well, wasn't he? Dan M as well. I know I've said Ciron again. Queen, there you are. I knew I'd find you. MM as well. I'm really, really sorry if I've missed anyone out, guys. But it's really fantastic to see. Adrian as well, who was there at the beginning of the stream along with Bernd. Thank you so much for your time. Do come and you can come and find me on Twitter as well. But I would always say, come and grab yourself a deal, get a free trial for the Nest, come and see what it's all about. Loads of good resources, fantastic trading community. And yeah, nothing else to do but wish you guys a fantastic week ahead and an even better weekend. And I'm going to catch you guys on Monday. Take care.